Good morning, everybody. Welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had an amazing weekend. Glad to see you all making it back today on a Monday morning. For those of you new to the channel, make sure that you click that subscribe button down below so that you get the updates as they happen. We look at the same 10 to 12 futures markets every day, identifying breakout trades and turning point opportunities. So let's go ahead and dive right in, as we do each day. So starting with the S&P, Friday we had another fairly strong upward movement day. We did pull back a little bit in the early afternoon hours on Friday, but we're really not able to hold on to much of a pullback. I said on Friday that a potential short below this 2713 region if we got to that area. Never were able to. You know, I had talked about the momentum weakening. If I were to take a little bit of a trend line here, we can connect this as a trend line. You can see that we are still in that rising trend line area. It's not shown a whole lot of weakness, and it's continuing its move higher. So if I take a look at this on, say, a 4-hour time period, we had a gap up last night in the S&P, and there is still room to run higher, right? There's still room for this thing to get a bit higher. We are sitting at what could be a little reversal point here. As I look at this on the 4-hour time period, we have a little bit of sideways price action here. This would be a fair price value area. Price dropped in. We've touched it one time. We fell hard from it the first time that we've touched it. And we're back into that area now. Not sure we're going to get the same deep pullback from it that we did the first time, but we did fall from it really hard the first time. Now, there's still an opportunity up here to get short if indeed price does come back to this region here on the 4-hour chart. But that means that there's plenty of room for price to continue its upward momentum. What if it does come back down? Well, if price does indeed come back down, I think that a good place to look right now would be right in this region here, which served as resistance and could act as new support. If I just identify this area here, and then we'll go to the hourly chart to see if we can't trim that down a little bit. So when I move this to the hourly time period, you can see there was a fair amount of time we spent in this region. So I'm not as keen on this area since we did spend so much time popping along sideways in here on the hourly chart as I am on the 4-hour chart. So what I'd have to do is I'm actually going to go a bit lower and use this area down here. You know, it's a little bit lower on a call it the supply and demand imbalance. There's more opportunity in here to get long because there's more room. It'll be a deeper pullback. The other side of the equation is, let me just wrap this whole thing. If indeed we do get a pullback, I'm gonna turn on our normal fib lines. Now, I'm not a big fib trader, but when thought I had turned them on. There we go. So when I turn this back on, you can see that we're sitting right there, kind of between the 50% 38.2 retracement. Now, we're not at either one of these lines, but we are, sitting right at an area that you're more likely to see a reversal when you're in this 38 to 50% kind of region. And I'm not a big fib guy. I like to see if I'm going to see a fib line up, I want to see it line up with true areas of supply and demand imbalance. But I think this is close enough to that 50% retracement point, that you could get a decent little movement. And that now I draw that here and I say, well, it's not quite the 50% line. If we get another little thrust higher, let's say to here, then that would be right at about the 50% region. So just keep that in mind, that there are enough, and I'm not saying that fibs help move the markets, but what I will say is that there's enough traders that use it that algorithms and things along those lines that use it, especially at a 50% retracement, that could become a pretty valuable area. So just keep it in mind, something to look at. The NQ, however, is weaker than the ES. So if I look at the ES, I can see that I've got a slightly weakening trend. On the NQ, it's a much stronger weakening trend. And taking a look at this, drawing that same trend line, we're actually sitting right about on it. We're also definitely closing in and pinching a little bit. So if you do think that we're sitting at a potential reversal point and that we are getting weaker on this upward movement, the NQ becomes a better I guess the word would be market for shorting in this time period. Now remember that the NQ and the S&P have kind of deviated from one another as far as those all-time highs, because the NQ, after its fall in early February, it reached a new all-time high, and then it's fallen off from there. Now, this is the same level that we just looked at in the S&P, where it touched it once, big times fail off. But this one's already broken through, which is why I'm not taking it, on the S&P very strongly. But if it breaks on the Nasdaq, you've got a little bit of a better opportunity for that shorting. Now, understand, doing this, you're trading against the trend. So if you decide, hey, I'm going to give this a go, you do know that you are trading against the trend. There's a little bit more risk involved in there. And so what you may want to do is wait until that trend is broken, and maybe then look at trading a reversal as it comes back up. So I would caution jumping in one way or the other today. There's really, once again, I need a reason to get in, and many of you are probably still holding on to the long from this breakout that we had back here earlier in the week, or some of you are still long from this area that we had identified last week on Monday. So if you're still there, great. And if you're not willing to give it up yet, then certainly don't. But I caution patience, and I think it's a good opportunity to allow it, if it does break down, see if there's a rally back up to a fair price value area to get in. Looking at crude oil. So crude oil is definitely showing some more signs of weakness. It is selling off just a smidge. Just a smidge. It's down about almost $2 from it. A little over $1 from its high on the hourly chart. When I look at this, there's really not a whole lot of great areas in here. You might go down to the 15-minute time period. And on the 15-minute chart, you may find something right in here that kind of gets you going. So I'm going to change this to a purple line, because remember, we always know that there's there's lower probabilities on the smaller time periods. Now, this area, what is it that's interesting about this area? Let me kind of zoom in on this and see. You see this long upper wick. This means price came way up here and then came back down. Now, why is this long upper wick of any value to us? The reason is because by this wick going way up here, we know that this area here that existed in the past, all of those orders had to have been wiped away. So this new area that was created here is not a reaction to this here. What this often could be is a reestablishment of orders. Call it an authentic establishment of orders that was built in that zone. And it's because of this long upper wick that had to have penetrated any leftover orders that were here. It also had to have penetrated any leftover orders that were here. Now, so nothing back here from the past can exist. However, a lot of stuff could have been added, meaning there could be more orders added to the queue, and that would be this area right in here. Now, the thing I am not a huge fan of is that we tried to come back into it and we're unable to do so. So I'm I'm going to leave it on this purple line. If you are so inclined and you want to take a little bit less risk even, wait for it to come into the area and then get long as it comes back out. Now, this is completely up to you and your risk tolerance. This may actually cause you to miss the trade in case we do get a touch and go at this area. But this is, I think, a good opportunity to get long again. Gold, we have a breakout long setup in place here and didn't break out above there on Friday, so we're still holding off on this gold area. The gold upward trend here did break, and so I think actually there's a better chance that we will pull down a little more from where we are than break up. If we do break up, I think there's room to run at least until like 1331, so for a fairly small day trade, could go a bit higher. Let's move over and take a look at bonds and currencies. So our bond market, we've got an area above us, below us down here that we've been waiting on a breakout for as it's been chopping along sideways. Not a whole lot happening on that realm. So we'll leave that one be as it currently stands. The Aussie, we've got a little bit of a reversal just above us here on this fair price value area. We could potentially get a breakout long above this 75.64 area. This is not a great breakout because I don't like how messy it was back here before it would have broken out. So keep an eye on this area. This could be an opportunity for you. You also have potential to get short. So this is kind of ranging, if you will, between these two areas. What I see oftentimes with this, though, is there's no real room to roam on either direction, and so this is where sometimes you'll get a fake out, shake out, breakout, where it's tight, where it's a little bit of a tight base on a small time period. I do think you may get a little chance to get long down in here for a potential reversal if indeed it comes back into there. But I'm going to use the dashed line on here because we're in between bigger reversal points, and so it's not it's not a great opportunity either way. But I think there is a potential reversal here. The euro, we do have the long setup in place here on a breakout, and we did get a breakout above that area, so this one is running. So we'll keep an eye on this. You probably want to take your stop, move it up to underneath this area here, just above the break-even point right now. Lock in a little bit of profit as it's continuing its move. And the Canadian dollar, the Canadian dollar, we did break down below here, and then we've come back up, back above it. So I want to add this area up here in the Canadian. So it's a level that had happened a while ago that I still think is pretty valid. And last page, I know I'm running a bit longer today. I want to make sure that I get as much in here as I can. Last page, Great British Pound, Japanese Yen are the ones that we'll really take a look at. Nothing else really to do. Nothing to add here really in the Great British Pound. We still have a reversal trade right here. And in the Japanese Yen as well, nothing to add. Still a reversal trade right in here. So both of those, we're just going to hold steady to where we are. Copper, I don't have anything super close. And then nat gas, we've really tightened up our area here. There's nothing here that I'm falling in love with on nat gas after this strong rally up. There's nothing here that's really exciting me. So today is a great day to preach, as every day is, a great day to preach patience and to follow your rules and follow your plans. Remember, there's nothing that says you have to trade today. You have to trade only when it comes into your areas, and don't force it, because forcing the shots is what makes the shots not fall. So, all right, everybody, I will see you tomorrow. Thank you so much for joining us on